Bitcoin, Ethereum, crypto, stocks, real estate, especially the Forex markets, everything getting crushed by the dollar. Right now, it seems to be the only thing that matters is the dollar's parabolic, seemingly unstoppable freaking rally at this point. How is it affecting the Forex markets, and how is all that affecting the stock markets? And of course, how is it affecting Bitcoin? All that and more in today's video. I'm Lark. I make videos on investing. If you like that topic, make sure to subscribe to the channel and tap on that thumbs up button to let me know you do appreciate this kind of content. Let's get into it. There it is, guys. There it is, the dollar index. Oh man, we got all the way up to 114.5 today. That's insanity. Crazy, crazy rally happening here for the dollar. We actually saw it breaking out of this downtrend on the RSI. You know, getting definitely into overbought territory, but that can happen quite a bit. We can see it be overbought for a while as everything else keeps on tanking. We are in a massive rally here for the US dollar, and until we start see it definitively closing under the 50-day exponential moving average, we can just assume that any pullbacks will just be basically bounces off that, giving us those short windows for bear market rallies to happen. And you can see how the price action has been for, you know, the past year, right? We've had these rallies up and then short moves down to retest the 50-day exponential moving average. And particularly since the start of 2022, this has been a just incredible rally here for the dollar. So until we really start closing under this yellow line, the 50-day exponential moving average here on the chart, we should consider that this is a rally that is going to continue. Right now, we are getting some serious momentum coming up behind the dollar. The main target here is actually all the way up here at 120, which if we just throw the weekly charts up here, we can get an idea for how long ago we reached 120. It was all the way back in 2002 and 2001. That was when the dot-com bubble had burst. Global markets were absolutely in the freaking toilet at the time. So we had a massive dollar rally back then, and now we are aiming for a potentially, well, that would be the next major area of price resistance here for the dollar. We'll see if that ends up playing out, if we get it to that high target. But in response to the dollar strength, everything else has just been getting hit hard. This is the British pound. Look at this. Look at this chart. Look at this chart. What is this? This looks like a shitcoin chart, man. What is this? Holy cow. British pound just getting hammered as the dollar rallies higher. And of course, the UK's got a lot of internal issues right now with its domestic energy crisis and stuff like that. So weakening the pound. What about the euro? Well, pretty similar situation. You see, these things are on the absolute opposite end of the spectrum. This is the 50-day exponential moving average, again, the yellow line here. And unlike the dollar, they have been basically operating in exact opposite, right? This is the euro dollar chart. And so every time we see the dollar rallying, right, we see it potentially draw off a little bit. But then when the dollar weakens up a little bit, comes back up, we get these little rallies that have been happening, but we continue getting rejection off the 50-day exponential moving averages. So until these invert, we're going to expect weakness in global currency markets and for the dollar to continue rallying. Now, a rallying dollar also bad for the stock market. So this is the S&P 500. On Friday, we actually came back down to retest this key line of price support here around 36.35. Now, with Forex markets tanking over the weekend, I think that puts a lot of pressure on the weekly open for the S&P 500 this week, because a strong dollar tends to have an inverse effect for not just Forex, but also for the stock markets and, of course, also for Bitcoin. So if we see stocks dropping as a follow-on to what's happening in the Forex markets right now, we could see some real chaos continuing to come into the markets. Of course, the next major area of price support, as previously mentioned, here for the S&P 500 is down at 3230. So that's a pretty significant drop from the current price. We're talking all the way down 12.5%. What happens to Bitcoin in that scenario? Is that another 10% drop for Bitcoin, a 20% drop for Bitcoin, a 25% drop for Bitcoin? You usually do see it moving a bit faster than the S&P 500. Either way, probably going to be trouble if of course that ends up playing out. Now, before we get into the Bitcoin charts, If you don't have an account yet over on Bybit, you need to get yourself one. It's the best place for trading futures contracts, whether Bitcoin, Ethereum, all the top coins, 0% market maker fees by using the link in the description. They also have 0% fees on their spot markets, totally crazy. And by using that link in the description, you'll also get up to $4,450 in deposit bonuses. So thank you very much for supporting the channel by using that link. Now, let's take a real quick look at this. This is from Alex Kruger. He pointed out something that's definitely true. He said last week's was the lowest Bitcoin weekly close of 2022. It's quite the moment, quite the event. He said if the chart were inverted, everyone would be screaming higher, right? So the idea of inverting charts lets you look at things a little bit differently and say, well, because this is a relatively bearish looking chart at the moment, but if we flipped it around, like, oh, everyone would go, wow, we're getting ready for a big breakout here potentially. Keeps tapping on resistance. The opposite applies here. We keep tapping on support, right? With lots of macro weakness, tightening conditions at the Federal Reserve and all that stuff, right? So these are the kind of conditions where we must tread with caution. Now, over the last few days, we've seen $18,500 acting as a key area of price support here for Bitcoin. We shall see if that continues to hold up or not, obviously. We are very close, though, to putting in a new yearly low, especially if stocks have a rough opening this week. Expect a bit of volatility in the cryptocurrency markets. It's only going to take a 6.5% drop for us to hit a new yearly low for Bitcoin. If that happens, that means altcoin chaos, without a doubt. Now, the contrarian view here would be that maybe Forex markets are going down, but hey, maybe US stock markets are going to have a rebound here. Maybe the dollar is going to cool off a bit this week, giving stocks some room to breathe. The Fed has just come out. They've done their thing. Everybody knows that now. We can price that into the market, quote unquote. Still 2 weeks away before we get our next bit of inflation news. Maybe that's going to be a positive thing. Maybe the market can start working some positive narrative around that. Maybe we can get a slight rally coming in here. If that is the case, well, then we have two key areas to watch out for. The first, of course, $19,500, which is the next area of price resistance. You can see basically the price of Bitcoin has been ranging in between $18,500 and $19,500 for the last week or so, just in the same way that we ranged sideways between $19,500 and $20,500 back here in late August, early September. So we're again stuck in this ranging scenario here for Bitcoin. A very keen area of interest, though, I think would be around $20,500. That lines up with this key area of price resistance here, as well as the 50-day exponential moving average, which has been an area where we have seen continual rejections for Bitcoin, right? So maybe we rally up as high as this purple box here, which is a key area of price resistance as well. But the 50-day exponential moving average would be the key area to watch for in the short term. If we do get any kind of price rally, that would be a potential area to either, if you are trading this, to either open up a short or to, close out your long if you're in that kind of situation. So something to keep an eye on here. The dollar has been showing a lot of strength in the market. We are definitely in the macro kind of conditions where everyone keeps fleeing into dollars, getting out of the stock markets, running from Forex, running from Bitcoin, right? This knock-on effect will continue for a while. The dollar rally at this time, not showing any immediate signs of cooling down significantly. So we must proceed with caution. For risk assets, while we continue to see such a strong dollar rally, the dollar will not rally forever. It simply will not. Maybe a few more months, but it will not rally forever. The day for risk assets will come back. The only question is, when is that damn day? Anyway, let me know what you think about all this down below in the comment section. Thanks so much for watching today's video, and peace out till next time.